Hey everyone, happy Thursday, April 9th. It's a little bit before 10 a.m. on the West Coast, and it's time for another market update. Well, as I'm sure you all know, the war with Iran is still going on. However, there has been a ceasefire brokered by Pakistan between Iran and the United States. And that initially set off a nice little rally in, both stocks had a great day yesterday, and mortgage bonds started off on a great note. However, as the day went on and different news broke, whether it was the attack still going on in Beirut, Lebanon, or whether it was Iran stopping traffic going through the strait and oil wasn't, moving through the strait like people thought. But especially mortgage bonds started losing confidence in that truce and kind of flipped. So that was unfortunate to see because again, if that this war gets settled, we would probably see things go back to a little bit of normalcy. We would probably see rates come down. However, the markets are really hyper focused on this war, and like we've talked about, a lot of that, all of it basically has to do with oil and energy costs. It has a big effect on inflation. Inflation was already too high, so the thought is the longer this war goes on, the higher oil prices go, and that will have a negative effect on inflation. So a lot of data, which we'll get into here in a second, that came out this week. However, the markets are, like I said, still hyper focused on this war, and for good reason. As long as it's going on, as long as there's uncertainty, and there's definitely a lot of uncertainty in what's going to happen next. As long as that's happening, we're probably going to see a lot of volatility in the markets, a lot of reaction depending on what the news of the day is. And like I said, at first it was there's a ceasefire, and that's great news, and things reacted positively. But then as the day went on, there were some negative things that came out, and the market started reacting negatively. So again, I'm going to have to keep a very close eye on that, and let's hope for both, like I've said before, for both moral and volatility reasons. Let's hope that the war comes to an end and no more loss of life. So as far as the data, again, last Friday we got the March BLS Jobs data, and it's been pretty crazy data we have got from them over the last couple of years. Not very believable, and once again we got some more unbelievable data. And so it came in at 178,000 jobs created. The expectation was about 60,000, so almost three times the amount of jobs were created than as was expected, which was not a good thing. Again, we don't want to see too weak of economy, but again, like we've talked about, the Fed is looking at these job numbers, and the stronger the labor market looks, the less likely they are to cut their rates. So we kind of want these numbers to look bad. We want it look like the economy is slowing down quite a bit, so that the way the Fed stimulates the economy by cutting their rates. So like I said, on the first part of the business establishment survey part of this report came in way higher than expected. It will probably be revised down, which it's done in the past, which they did for January and February. And then the second part of this data that comes out is the household survey, where they call and actually talk to people and just don't do mathematical formulas to come up with this data. And that came in at then that's where we get the unemployment rate from, and that dropped from 4.4 to 4.3%. And that wasn't because there was more people were employed and things like that. Really, what that had to do with how they collect this data. They look at the number of jobs created, which was actually negative. It showed job loss in that report. However, they showed more people leaving the workforce. So when they do that unemployment rate, it actually made it drop. So again, not that strong things happened. It was basically that they had less people be included in the numbers. And the reason that is either they're not working full time, or they're not being picked up in these numbers, or if you're unemployed for long enough, they stop counting you in these numbers. So not necessarily screaming strength in the labor market, more about with the unemployment rate going down, more about just that people have been unemployed longer. But again, it's one of these reports where the war with Iran actually did us a favor, because if that wasn't going on, and this number came out and unemployment dropped, and three times the amount of jobs were created than expected, this would have been a pretty bad day for mortgage rates. But I think the markets were both focused on the war, and then B, are not really buying these BLS jobs reports anymore. They're just so far off from reality. So, which is how I view them. So hopefully the markets have kind of gotten, figured that out, and are now just kind of discounting this data until it shows some basis in reality. So again, one of those things where the war actually helped us, because otherwise it probably would have been a bloodbath with a report like that. Next data we got was actually today. We got February's PCE, and it came in line with estimates. But again, keep in mind this is before this war started. So this is February. like it says right there, both the headline and the core came in as expected at 2.8% and 3% respectively. But again, this came in before the war started. So, next inflation data we get should start showing the rise in cost of oil and things like that. And like we talked about, even if, with core where they take out energy prices, it still tends to work its way into those numbers. So, again, as expected, but the market's very distracted by other things, and this really hasn't had too much of effect on the markets today, so we'll have to see as the day goes on. But two really big pieces of data between the BLS and the PCE that in a normal week that's would be big market drivers, but instead, again, with the war with Iran, everybody's distracted by that and really not paying or reacting too much to this data. So where does that leave us? So the average 30-year conventional is about 6.4 today. Last week it was at 6.41. So again, a pretty calm week, I guess you could say, with so much data going on. And again, it has to do with everybody just kind of waiting to see, if that ceasefire holds, what ends up happening over the Middle East, and how that affects oil and energy prices. So, a lot of crazy stuff happened this week, a lot of data, but rates basically just changed very, very small amount. So what's upcoming as far as important dates? Tomorrow we get CPI. So that's actually a look at March inflation. So generally not the Fed's favorite one, but this one will actually be seeing some March data. So that might be an important one, could have some effect on the markets. But again, and then after that in April, end of April, we get the Fed's next meeting. But again, with this war going on, that's going to be the main focus. Until it comes to an end, until there's some sort of sense of it's definitely coming to an end. And with so much uncertainty with what's going on over there, it's hard to feel confident that that will be anytime soon. So let's hope so. Let's hope something pops up and everybody, settles down. And then that way we can get back to just looking at things like inflation and jobs data and not worrying about what's going on with the war over in the Middle East. So I hope everybody has a great weekend. If you love golf, then I hope you enjoy watching the Masters. And have a great week, everybody. And we'll talk soon. Thanks a lot.